The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Bill Koval of WDK Analytics will be on. He's got some great information for us. That'll be at the break. We'll start out the day like we usually do here with the DAX index. We got down to 12,158. As you can see, it's been having some pretty good swings through here. If we take a look at the longer-term daily chart, you can see that we came down and hit an exact 61% retracement here so far today and have been able to rally 50 DAX points, which is, quite a bit considering it's at 12,000 and we're at 22,000. So 50 points in our markets, it's like 100 points there. So that's still a very, very good rally. So we want to look at it as we go through. Let's take a look at what's really happening here, folks. This is what we were looking at coming in here on Monday. And as you can see here, this was the S&P. We had completed these 15-point corrections, just spot on, just as easy as you could see. And then, of course, we had the really nice rally that took the market up to the 61% retracement. And then after that, here's what we're looking at. And I would like for someone that could explain to me how this is going to be bullish. But, I'm wrong a lot. So pay particular attention to it, folks, because it's a very interesting chart here for sure with this wide range down like that with a lot of thrust. Now, we do have the solar eclipse and new moon coming in on Monday. And believe me, that's going to be don't have to believe me, but I think it's going to be a very active one. If you remember when we started this month, we went back several months. In fact, back in January, if you remember, we had Bill Meridian on and talking about the new president and everything, and he said how difficult it was going to be for him in August, and that certainly continued to be the case. And also Shane Smolian did the same thing, that they worried about this time during August, and also the increased activity that we're seeing, in the stock market. But we'll have to, do one day at a time with this. But this is what we're watching here this morning in the stock market. Now, if we take a look at the E-mini S&P where we closed, we went down, of course, and made a slightly lower low than the other day. This was from a day or so ago. I think we made a lower low last night. I'm pretty sure we did anyway. But with those wide-ranging bars down on this 4-hour chart, that would really be highly indicative that we are getting ready, to make some type of a substantial bottom here on the 21st, which is going to be the solar eclipse and new moon. It goes across the country. You'll go online, folks. You're going to see all kinds. You don't even have to look up in the sky. It'll all be recorded for you. And it'd be nice if you could see it live, but neither here nor there. That's what it looks like. It starts in South Carolina and goes all the way through, Oregon. And, of course, as Norm Winsky mentioned yesterday, it crosses right over the fault lines of the New Madrid earthquake from the 1800s, which was the earthquake that rang bells in Boston, Massachusetts, 1,600 miles away. So whether that means a lot or not, I don't know. Let's talk just a little bit about the VIX index. We had a big run up, we had a pullback, and then we had another spike up. Whether this spike is going to mean anything or not remains to be seen. But if you look at the ABCD structure on this VIX index, that's going to take it to the first move went from 9 to 15. That's 6 points. We backed off to 12. You add 12 to that. 12 and 6 is 18. So we'd be looking at a minimum of 18 in the VIX. And frankly, I think it's sometime in October. I think we're going to see the VIX, well into the 40 or 50 level. But, that's my opinion. The one thing that the two major crashes in our history of our stock market, 1929 and 1987, the only thing that I could find that they have in common Well, they have two things. They were right around a new moon. They started around that time. And the second thing is they were 55 days from the high. In 1929, from September the 3rd to October the 29th was 55 days. In August in 1987, from August the 25th into October 19th was 55 days down. So if we take 55 days from the high, which was August the 8th, that takes us to October the 2nd. So if you want to protect yourself a little bit, or, put a couple of lottery tickets together, buy a way out of the money put in the Dow Jones or the NASDAQ. I would pick the NASDAQ because that's probably the one that went up the most, could come down the most, but we'll have to wait and see. We have a question about gold hitting the 1306. We've broken out, yesterday it was trying to tell us that it was really trying to hold that level because we had a $10 break in the middle of the morning, and that stopped right at a 382 of that previous low that we had down there at the 1272 level, and now we've rallied $34 from that level, making a new high. Now we need to close above that, especially on a Friday. We need that gold to close above that 1305 level, and then I would think you definitely have a valid breakout. Silver is still lagging a little bit, but again, not by very much. So that's what I'm feeling at in the gold. And we're seeing pretty much the same thing in the bond market too, folks. The bond market is going under a reconstruction of a flight to quality is really what you're looking at there. And when you look at the bonds, it's really, it's making another triple top up in here. If we take a look at the Bund, which is the German Bund, this is a daily chart. You'll see the same thing is occurring in the German Bund. We had this really good rally here, and you'll take a look at it. By the way, those are my opinions, folks. When I give you opinion on gold or silver or anything like that, and remember, opinions are like armpit. Everybody has one, and it usually smells poorly. So remember, that's my opinion. These are just patterns that I'm looking at, and the patterns do fail. If you get them to work about 60% of the time, you're going to be doing pretty good. But sometimes, they just don't work, and you've got to be able to protect yourself and move on to something else, because it's going to be very, very interesting in some of these markets for sure. I believe if the bonds break out here and get to that 158 level, which is certainly possible, it's going to set up a monster 3-drive pattern on the long-term daily that has perfect symmetry, and it would come in, sometime in late August. So we'll watch that one with a great deal of interest first. But if we get above the 156.20 level, that tells us we're most probably going to go a couple handles higher up to the 158 level. And but we have to do it. And it's basically a flight to quality. The Treasury notes are lagging badly also, so that's really interesting. Take a look at this Treasury bond chart that I did this morning real early. Well, everything's real early, but you'll notice up at this 156 level, that's the 78% level. You have a beautiful ABCD pattern over the past few weeks fitting in perfectly. It's also a 3-drive pattern. So now you see the symmetry that's there. The question is where are we going to pop above it? 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, those of you that want to view the eclipse, there's a really easy way to do it. If you go on the internet and check how to view the eclipse, they'll show you how to take a piece of paper, put a dot in it, and then put that over your shoulder as the sun is on top of you or behind you. And as the sun shines down through the hole in the paper, you'll be able to see the eclipse go through that. I'm sure it's on the internet somewhere. 25 years ago, it's around 25 years, I don't know the exact date, we had a solar eclipse over Tucson, and they were selling these little gimmicks for $20 to view the eclipse. They're much better than the glasses because it was safer. And, of course, all the money went to charity. But it worked really well, and I believe if you go on the internet, you can find it, and it makes it real easy to look at it by using just a little pinhole in a paper and then letting that go through to another piece of white paper, and you can actually see the whole eclipse as it goes through. I think it lasts about 20 minutes, as I recall, and I was listening to the news a little bit this morning to see if the end of the world had happened, and it hadn't. So they were saying that the solar companies are going to have an interesting thing because the energy is going to drop at that point. Whether it does or not, I don't know. Okay, let's take a look here at a stock that is in big trouble, folks. We've been watching this for a long time. This is Deutsche Bank. If you'll look back there, in January, they offered the stock at a 35% discount, so it was trading at 20. 35% of that is $6. Those people that took that discount are still ahead, but not by much. And the question is, why would they offer 35% discount on a stock if they thought it was going to go higher? And of course, it is heading lower. Anything below 13 in this stock would tell us that we're most probably looking at a stock that's going to need some too big to fail type program to keep it from going underwater. But there should be some pretty good support around that 1450 level in Deutsche Bank. The problem with Deutsche Bank, folks, and no one really knows the extent of it, is counterparty risk. They put together all of these exotic ETFs and contracts and stuff, CFDs, and all this other stuff. And the other side of that party that's doing that trade might not be able to fulfill it, and that's very important. If you remember, long-term capital back in 1998 had the same problem. They had a really great idea, but the problem was they were not able to fulfill their part of the deal because they were the whole market. So they bought, and when it came time to sell, the broker said, "To who?" And that's what happened. Whether that's going to happen to Deutsche Bank or not, but if you Google Deutsche Bank, you'll see that the counterparty risks that they have extend like something you've never seen before. Just about every bank in the world is involved with Deutsche Bank in some way or another. They used to be the largest foreign currency operation in the world. When I first started trading foreign exchange back in 1972, the Deutschmark was trading at around 25, and it went from 25. Oh my gosh, I probably went to 100 or more. But if you'd have bought a Mercedes, you basically were buying the Deutschmark, and that's why Mercedes had such great resale values, because the Deutschmark continued to go higher. That's neither here nor there. Okay, let's move on to some other things that we need to cover, and then we have Bill Koval coming up at the break. We want to certainly chat with him about what he's looking at, and we'll keep a very, very close eye on some of the things that he has to say. Folks, the one market that looks very, very weak, and we mentioned this yesterday, we'll put this up here to take a look at it today here. This is the IWM. We went below 136 yesterday. If you notice those swings that we had during late July, early August, and then from the 8th up into the 12th, the 13th, those were the 14th, which was Monday, sorry. And that has now set up another price objective that takes it down to the 132 level in the IWM. Now, I'm not sure whether this market's going to go down or not, but the technical things that you look at as far as Fibonacci and pattern recognition are certainly pointing, to a lower market. Now, I do not believe it has anything to do with what's happening in the news, like the presidential stuff or any of the other things with China or North Korea. I believe that's the excuse. The reason is that I think we've probably made a pretty big top in here. And we've looked at these numbers. We've looked at some of the astrology stuff. And it certainly, makes it look like a very, very interesting picture here. Just remember, when we were here on last Monday, let's just bring this up so we can take a look at it. And you'll see that the Dow Jones Industrial Average, was already starting to break. We had a 61% rally in the Dow Jones, and now we're starting to drop quite a bit. You'll notice that time between September right after the eclipse, right around the 22nd to about the 19th of September. And look at that between September 19th into that big drop, which is 55 days from the high. We really need to pay attention to that, because we've only seen this 2 other times in history. And whether this is going to be another one of those times or not, I don't know. All I know is it looks very, very interesting. Now, the Bradley model in 1929 was showing the same thing, and the Bradley model in 1987 was showing the same thing, of a big move down. Now, the Bradley does not tell you the extent of the move. It just tells you that the trend between the two dates should be to the downside. And believe me, it's not right all the time. So watch it very, very carefully. But it's got a lot of things set up. And it really should, it's really going to see. That's right. Oh, boy, you guys here in this room here are absolutely cracking me up, but that's what you can do. Anyway, we'll move on here to see what's going on. Okay, what I don't understand is we've had these, I'm not going to get on that soapbox. Stop the music. We're going to move on. Just a minute. Judge's ruling. We're not going to go to that area. Hold on a second here. The bonds have now taken out that one of those key points at the 156.08 level. So that appears that we could be looking at some more, selling to the downside without too much trouble. We're starting to move down in the stocks a little bit, but we'll see. Folks, one of the things that I've learned in a lot of we got up to what 1306 in the 1307 in the gold. We need to close above that, folks. The reason for that is we're seeing some really strong divergence between silver and the gold. So we've seen this all along, and that's been one of the reasons why we've not been, wildly bullish to silver or anything like that. But, silver was able to take the highs out of the 10th, but by very little, and is now reversed over 13 cents from that level. So that's why it's important to see it to do on a closing basis, especially here on a Friday. That's what I would be watching as far as, something that I think would be, really important to, to pay attention to. So that's neither here nor there. The same thing with these Treasury bonds. They need to close above the 156.20 level, to be what we consider a valid breakout, and then you would have a shot at being spot on. So that's what we're watching here in these bonds and notes. But longer term, these puppies, we're looking at higher rates, my opinion. Stay tuned for Bill Koval of WDK Analytics, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have Bill Koval of WDK Analytics on the line. Bill, are you there?
Yes, sir. Yeah, sure am.
Well, you've got the right picture up here, my friend. The folks in the den would like for you to discuss this Hindenburg and what it means and what you're looking at here. So fire away.
Sure. First of all, I, of course, slide this first, and it Yeah, it shows some portents of perhaps another top here that we're entering into. But specifically a Hindenburg moment occurs. Actually, it's part of the series here. That's why we have these spikes up in it. The more occurrences, supposedly, the greater the signal. And the Hindenburg trips when there are a high number of both highs and lows in the same time period or same day. And the more of them, apparently, which we're seeing at tops here, will tend to reinforce the signal.
Okay, that's good. Who started this signal, Bill? Do you have the history of it?
By golly, I don't know. I was just reading some things online the other day, but they didn't point to that, and I didn't dig deeper for it. So.
I might have been Bill Ohama, but I can't remember going back. That's 40 years ago. He did a lot of that kind of stuff, but that's beyond my pay grade to remember that. So we'll not worry about it.
Well, it could be because it's not a recent thing. I've been reading about it for years. So,
what is it what's it telling us, Bill?
Well, basically that there's instability. There's there's indecision, and naturally when there's high valuations the way there are now, you're gonna see a lot of new highs. But it's apparently it's the new lows that occur at the same time that are significant. In other words, it's showing, on the one hand, distribution at the same time that there is still interest in the leaders.
Okay, that makes good sense. And is this the main function of what you see happening, the fact that we have this over-evaluation of all of this, along with the Hindenburg that puts you at the bearish camp?
Well, yeah, I contacted you the other day because I was doing some research on bubbles in the past, and I happened to start calculating the ratio of bottoms to tops on many of them, and there seems to be recurring ratios, and that's actually what I was going to discuss. The Hindenburg is, really confirmation of the elevated nature of the markets right now. Mm-hmm. And specifically, I wanted to comment on the recent 2017 bubble here that we're in, and as well as .com and 1929. I was just going to show the ratios, and the ratios in and of themselves can't guarantee that a top is in, but the ones I'm showing you recur, and I'm going to defer to you to make some observations. I felt you had a pretty broad base of historical precedents with respect to numbers, cycles, planetary movements, etc. And these ratios that I'm showing are specifically 3.7 times, 5 times, and then 10x, which is .com. Mm-hmm. And I'm just wondering if they have any planetary significance, among other things. I know that recently some of these bubble tops occurred after 8 years of run-ups. As far as .com, it was going on. It was almost double that, like 15 years. And so, kind of the 8 year, 16 years struck me a little bit. And you've researched those things a lot, and I just thought you could maybe share a few comments with respect to that. But first, we can get into the charts. The next one that I have, if you could bring that up, is the current one. It shows 3.7 ratios from bottom to top that occurred here in the current run-up. On the left is the Russell 1000 Growth Index, which is a favorite benchmark for managed funds. And then secondly, on the right is the S&P Cash in other words, they both, from the 2009 bottom, showing a 3.7 ratio of from the bottom to the top. We'll come back to these here if we need to, but let me cruise through them, and we'll give everybody a kind of an overview.
By the way, we got some information from one of our favorite people, Steve Rhodes. He told me that Norman Fosback was the first one to mention the Hindenburg. And then the guy named Jim Mika modified it and made it quite popular. So I hadn't, I guess you'll have to go to Google and figure out how it's calculated and stuff. But I think it's a combination of a whole bunch of stuff. But let's just move on to the next chart, and we can get some of your things because you got some good charts here that I really like to see. Do you want to move on to the next one?
Sure. After the 3.7 ratio is the, let's see, this is a current NASDAQ also. This has to be a 5x excursion from bottom to top in the current cycle. NASDAQ, as we all know, has been really booking north, and it's this kind of shows it. The other thing that I look for in these, and you'll notice that there's no more than in these quarterly and monthly charts, there's a very few black bars in them, which you would expect, of course, when you're going steadily higher. And then let's go to the fourth slide, which is .com.
Sure.
And here it's a longer ramp. Now I'm showing it from 1984, which people might argue a little bit with it. But I'm also showing the which is the 10x version, and then the 3.7 version is if you run the begin the count in 1991 at just a little bit above the 400 level on the S&P cash. So the truth is you can kind of manage these ratios in a sense by picking the right start date. So there isn't any magic in that necessarily, but I just with respect to both the time of excursion as well as the ratios, I felt that we're seeing some perhaps repeatable patterns here that could be extrapolated into the future. As far as the current one that we're in, the reverse.
Oh, Bill, we had to pay a few bills. Could you stay with us and we'll finish up when we come back from the break?
Yeah, sure.
You bet. Bill Koval, WDK Analytics.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're on with Bill Koval of WDK Analytics, and I wanted to ask you a question about this last chart that you have. This is the .com bubble chart, I believe. If you'll give me 1 second, I can get it up here one more time. Just give me a second. When I try to do too many things at once, I run into a great deal of problems. So bear with me here for just a second. I want to get to this last chart that we had, and this is the one with the big candles, the .com bubble thing, and we'll look at. I'd never seen these ratios before, Bill. This is very interesting because I just look at the prices and the patterns, but this 3.7 has popped up so many times at these levels. It looks very interesting for sure.
Well, it is, Larry, and that's kind of what prompted me to put all this together and explore it. And I was doing square roots of these numbers, et cetera, to try to flush or smoke out some kind of significance in it. In the end, I think that we're looking at just one metric, one data point, and that's not, one thing does not make a top or a bottom for that matter. It's a series of things. I just made a checklist here while I was waiting for you, and just yesterday, someone online pointed out the significance of the NASDAQ equal weight showed negative divergence here leading up to that big reversal day we had, and depending on the index, it was late July or early August. It was an outside day. That's another metric. John Hussman has been reporting on declining internals. My volume charts have been massively overbought for a long time. However, it's a combination of things that really puts in a huge top or a huge bottom. At the present time, it seems to me the bigger economic or geopolitical items that we're facing are going to have something to do with that fact as well, and that could be that situation in Korea. Also, we're facing some budget headwinds here with respect to will they or will they not extend the debt ceiling? One thing that's levitated this market for some time since Trump got in was the fact that there's huge expectations of tax cuts. Now, if he cannot or will not deliver on that, why, that's going to provide another negative in the overall background. So.
That makes very good sense. Bill, how would the folks reach you if they would like to get a copy of these charts or try out your newsletter? What's the best way for them to reach you?
Yeah, they can do so at the website, which is wdkanalytics.com. And there is a box to sign up for a free newsletter there where you put your email address in, and all those who signed up for the next week, I'll send out these slides for them.
Okay, that sounds really great. Well, listen, we want to thank you for being on the show again. And anytime you have some good information, just let me know and we'll put you on the docket, because anybody that does this good of technical information, we certainly like to hear what you're looking at, especially when I see these ratios that I don't see. Well, if this is the first time I've seen them, so I certainly appreciate it.
Well, good, Larry. Thanks. I always enjoy it. And you.
By the way, I got some great
good work there.
I got some great news for us. We're going to be joined in Arizona by one of our good friends, Stan Harley of the Harley Stock Market Letter. He'll be moving to the Phoenix area very, very shortly, and so he'll be a neighbor with us. And so I've known Stan for over 40 years. So as soon as he gets settled in, we'll get together with some of the other folks that are up in that area, and maybe have a glass of wine or something, because that'll be fun having Stan around, that's for sure. Okay, Bill, thanks for joining us, my friend. I really appreciate it. Uh-oh, have we lost contact? I don't know if we have or not. 10-4, rubber duck, 10-4, copy that. Uh-oh, I'm afraid we've lost connection. Is that correct? I'm moving on. I guess it's okay. Sorry, folks. I thought I can see my internet connection. Yeah, it's Mercury retrograde. That's why I thought I'd lost the connection to the thing, but we're still okay. I don't know even what's happening here in the markets. Let's just check and see. A little bit of weakness, but no big deal. We're down near those lows of yesterday. Bonds are still up in that area. We need to get the bonds above the 156.20, and we need to get that gold above 1306 on a breakout. And then I think you've got something that will be pretty good. Should be pretty good. So let's just wait and see how the market closes for the day, and we'll watch it from that level. Remember, this is a really big event here that we're looking at with the solar eclipse and the new moon coming in on Monday the 21st. Whether it has a lot to do with the market or not, we never know for sure, but it's something that we should, at least keep a good eye on it. But with these wide-ranging bars that we've had on the downside, that's really tough to get over. That's a really negative thing, folks, when you see that selling. And remember, this is coming from a very high level, so that's also telling us that it's not a good thing, too. So just pay very close attention to the closes that we have today, because if we close really bad today, we're looking at some pretty serious potential for correction, and that would, take us down. We're 24. That's just about yesterday's range. If we look at the E-mini S&P, we'll be able to see what's looking. Someone's asking the question if the grains are dead. Bob, I don't know, but I think this solar eclipse and new moon should help. That last one we had, that lunar eclipse, and with Mercury going retrograde, didn't do anything. So I'm just waiting to see, what's happening. The corn, I bought some corn. It's out a little bit. The beans are exactly where I bought them. So we'll see. We had a beautiful Gartley, if you'll remember. We posted it on Tuesday. That was a Gartley in the December soybean oil at that 33.10 level. It's trading at around 33.60 right now. That's me. But since we're talking about agriculturals and we only got a few minutes to the break, I want to show you a market that's in big trouble, folks. And this is one that we were involved. Uh-oh, I've already lost it. Shut the front door and raise the rent. Doggone it. Doggone it. It's a cattle market, folks. The cattle market had a tremendous rally right off of the 61% retracement of 4 cents. It went from 106 to 109, and in 2 days it went right back to the 106 level. That is not bullish action, folks. That's very bearish action in the cattle. So you don't want to be involved there. When you got a 2 cent profit in something and it takes it all away from you in a day and a half, that's not what you like to see if you're bullish something. So pay pretty close attention to that. I think it's important. When we come back from the break, I'm going to share with you what I think is probably one of the best patterns that we've seen here since in the last couple of weeks, and it's one of those that really lights up the tote board when you're looking at Fibonacci and pattern recognition. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the copper market. This actually goes along with the possibility of a high in the stock market. If you'll notice, the copper market is only making a 38.2% retracement of the high from 2011. It's also making a 78% retracement from 2014 and a 61% retracement of 2013. So we have three major ratios coming in at the price of 298. And the high price in copper this week, which was set on Wednesday, was 298.10, and now trading at 294. I don't know, but that's something that you might want to pay close attention to, because when you got three ratios coming together like that, it usually means something very dramatic could be happening. Now, remember, these are patterns. They're not etched in stone. They have nothing to do with the fundamentals. We don't look at the fundamentals. We let the price bar tell us if there's prices are going up, the bars should be going higher. If prices are going down, they should be lower. So this copper chart has all the earmarks of something very, very dramatic getting ready to happen in this copper market. The fact that it could only do a 382 retracement since 2011, folks, should be shocking to anyone. Actually, that's the way I look at it, but, you know, I'm just looking at it as a technician. And to have all three of those ratios coming together at the same time, that is what really is really, really unbelievable. And that's it. Anyway, we'll see how it ends up, but keep a very close eye on it. Remember when we talked about on the show today that the ABCD structure in the VIX should take us up around 20 on this run. The other high was 15, and if we get a little bit higher, we'll be looking at something, a little bit higher than that over a long period of time. And I think October 2nd is where I think that VIX is going to top. So we'll see. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.